Let's go to the trading floor in Chicago and find out what's going on. We have Scott Gecas on the line direct from the edge of the trading floor there. He's with Walsh Trading. And Scott, what's going on behind you?
Pretty much nothing. So the volume's really light and the grain's going across the board just because we have a lot of news coming out this week. Everyone's focusing on the USDA report coming out on Friday. Private estimates came out. They're literally all over the place with lower yields, lower acreage to a little bit higher yields. So we have to wait and see how that's going to be playing out. What I can say is what we're looking at is the option flow. The option flow in the beans are a lot of call active across the board. So we have active call buying in corn, soybeans, as well as wheat. The difference is in soybeans, you have a $3 skew to the upside. What really is surprising is when you look at the corn option flow, that option skew is almost flat. So there really is no one way or the other leading to what kind of direction that we can expect for the corn market. The wheat option market is pointing to a little bit higher with the option skew, holding a little bit of a premium to the call side. But the biggest thing that we're looking at is the USDA report coming out on Friday. There's all kinds of estimates swirling around, rumors left and right. But one of the rumors that caught my attention is with the corn market, they are expecting somewhat of a bullish surprise to the upside. And remember that with the front month contract barely touching that $4 mark, some of the producers, some of the farmers that we've been talking to are already saying they expect higher corn prices above that $4 mark. It's just the market has yet to be able to close above that $4 mark. So we test it, pull back, test it, pull back. So what we're looking for is a little bit of either a close, a significant close over that $4 mark where we can get a big push higher. I personally think that if we get that close above that $4 mark, we could see anywhere between a 20 and 30 cent rally above that $4 mark if we can close above that.
December corn is down 3 3/4 at 385.5 right now. On the soybean market, let's go ahead and go to January on soybeans. We're 3/4 higher at 937.5. The deliveries really got cut down to only a little over 200 contracts this morning. On the wheat, well, we have Chicago December wheat now down 6.5 at 509.5, almost on the low of the day. Kansas City wheat today, we have December now down 3 3/4. We're at 422.25. That's a penny off of its low of the day, and we're about a nickel away from our earlier high. And if you look at the Minneapolis wheat today, we currently have it dropping about 6 3/4 cents. We'll be back in a moment, and we'll take a look at our livestock trade with Scott Gecas when we come back. Here, Scott Gecas is in Chicago. What do you think of that performance so far?
Yeah, the cattle market is on a runaway train to the upside. I mean, it's very clear that trend is still intact. Higher cutouts, higher cash trade, that's definitely poising for a little bit more buying interest. So earlier when we were trading around 115 or so, I was saying that 115 was a big mark. Closing above that 115 should have attracted more buying interest. And sure enough, it definitely did, as we can see with the higher prices. So the demand still remains strong. Cash cattle trade is definitely strong, as well as the cutouts. Until we see some type of break in the cash, we expect that trend to continue a little bit higher. We're going over to the lean hogs. I mean, that's a completely different story. It's all about the trade war talks, all about the high tariffs. With the Chinese prices well over 200% year to date, 43% just on a month or so. Imports for China were up about 43.7% year to date from the U.S. With the higher Chinese pork prices, they need imports. It's just a matter of them showing up. So with the positive trade war talks that we've just been coming out left and right, they're saying phase one is done. We have yet to see any confirmation on that. They have to wait until they find a destination and actually sign the agreement and have that details released. But that's definitely posing a little bit of upside buying. As you can see, we're coming off the lows pretty strong here. So what we need to see is the exports actually coming in, showing up. If we get any break in the tariffs, we expect those import campaigns to continue forward. We just have to wait and see what those numbers are.
Those beef cutouts that Scott was just referring to, they are higher today. And if we take a look at the screen, choice cuts up $1.14 and selects up $2.32. Thank you, Scott, for all the information today. Scott Gecas of the Walsh Trading is located in Chicago.